Howdy ho, everyone, and welcome aboard. It is Tuesday evening edition, and we're getting set for a US Open session that will be coming up very, very shortly. Of course, we're an hour away from the official Open, but, well, there are a few things to talk about. I was about to say there's a ton of stuff to talk about, but at the end of the day, there are not that many things to talk about, to be honest. But we're going to have interesting time in the old US session tonight because we're not going to strip it bare or pull it apart or anything like that. Maybe that's tomorrow night. But we're going to have a look at a different way to manage the strategy that I've been trading for many, many moons. Goodness me, how long now? Must be 8 years, 9 years, maybe 9 years since I've been trading this one strategy, which is kind of interesting. In fact, I've kind of been given a little bit of a shove, I think, into not changing, modifying, I suppose, is the management, the way that we manage the slingshot. And we'll be looking at that very much so in the US session. Of course, we'll be doing the usual trading thing if there's any trades about, but we've got Shukri along. And normally you would associate Shukri with cryptocurrencies, of course, the thing that he does so well. But he's also a trader of currencies. And he's been following the slingshot along for a few weeks now, or quite a few weeks now, and he's come up with a different way to manage it. And I, for one, will be very, very interesting to dig into that a little deeper as we go into the session. Of course, we've got a bunch of other stuff. One of the most important things that we've got today is that we have got no Forex factory. Now, that's a bit sad, but of course, there are hundreds and hundreds of economic calendars available around the place. So let's actually go and have a look at one, because we need to find out what's been going on or what is about to go on throughout the day, and if we need to avoid any trading time, or if we need to take note of something. This one here is, where am I? On investingcube.com. Actually don't like this one. It's not that nice. Is this today? Tuesday, October 20th. That sounds like today. It's all about the US. It's always all about the US, isn't it? Some would say. Surely we've had some other news today. Apparently not. 22:30. That would be what time of day? Goodness knows. That's supposed to be GMT plus 10. That's me. But that was actually an hour ago. Okay, so we're now into the Red Book Index. Okay, that sounds like something I've never heard of. I don't like this one. Can we move to another one? Anyway, I don't see anything that really needs to be talked about too much. US building permits, 1.553 versus 1.52 forecast and 1.476 previous. That's promising, I suppose. Housing starts, no number there. I don't know why. And change on building permits for September was up 5.2%. That's pretty good, one would think. I wonder what that's done to the US dollar. I haven't had a look at the charts for a little bit, I've got to say. So let's go back and do that. Have a little view of what's been going on since we last were with you, which of course was in the UK session. I'm going to start where? What's that? That is Aussie Kiwi. The reason I'm watching Aussie Kiwi is I'm pretty keen to get into an Aussie long at some stage. Now, we have had, of course, this little ongoing battle with myself and the rest of the world, it would seem, about the statement of Philip Lowe last week that suggested that the Reserve Bank of Australia were indeed going to cut interest rates at some stage. Now, I didn't read it that way, and I'm going to stick by that. Okay, there were undertones there, but gee whiz, the market certainly reacted, and we've seen the Aussie come off big time ever since that was the case. Will I have to eat humble pie and say that I was wrong? Yeah, maybe. Maybe I will. Let me go to the right chart here, would be good. Let me swing that across. There we go. And there you see one of the indicators that would suggest that I'm wrong. It's pretty hard to argue against it, isn't it, really, when you see a chart like that? That, of course, is Euro-Aussie, and we've been speaking about Euro-Aussie for quite some time because we've been in a very substantial and obvious range for the longest time, since the middle of the year, here in early June. Now, the breakout that we saw yesterday has been continued. In fact, it's been really rubber stamped big time in spades, one would think, with this big bar today, and it looks ferocious, as though it's going to take off and go to heaven or to the moon, as my mate Shukri would say. It certainly doesn't appear as though this is a bearish setup at this very point in time. That said, what is really causing this to go so substantially long? It's not only broken through the range, it's broken through this former support level and almost through the top side of that support level. I'm stunned. No, I don't think stunned is the right word, but look, there's nothing left almost. Okay, we've got that level there, which we haven't yet hit. But after that, whew, we're climbing the smokestack, aren't we? And that, of course, was in mid-February when we first learned of COVID-19, our constant companion for the past 8 months now. Is it 8 months? Wow, it is. Geez. Who'd have thought? Everyone was kind of saying, okay, 6 months, we'll do a plan for 6 months and see if that works. No, we've still got a long way to go, I think, with COVID-19. We shall see. All right. What do we do about this? Well, it's tough to row against the tide, I've got to say. And this one's very strong. Let me put that level back in, actually. It's got to be key, hasn't it? 168.75. If I'm a scalper, I'm probably looking to sell Euro-Aussie at that point, but gee whiz, it's a strong move. It is a strong move. In fact, I think the euro is having a bit of a day out. It did yesterday, and I think that's the case again today. Euro yen took off, was taken out, both trying short and long. Euro yen. Let me have a look. I haven't been taken into Euro yen, have I? 123.28. No, I don't think so. It just keeps going the one way. No, my order's here. But yeah, it's on fire, the euro. There's no question about that. Euro pound, there you go. We're just about to hit our stop loss, which is at entry on euro pound. It is really going for it. Wow, I wonder why. What's going down? Euro CAD's the same. We look like we're going to lose our 2 positions on euros short at this point in time. Of course, there's no damage done, but I'd rather have stayed in, wouldn't you? To be fair. Well, we'll just have to look for another entry. I think this is number 8 on Euro CAD. Okay, we're not out yet, but it certainly looks as though the strength of this euro move is definitely a wow. Look at that. Euro Kiwi. I was looking for shorts on all these things. Ah, there we go. Maybe Euro Kiwi is the one. Why? Well, because we're at the top of the range. That was why I actually entered this week. On Sunday, my analysis was, well, twofold really, because you could see a structure within a structure, and the rising channel, if you like, was, well, and is now, of course, as we look back, dominant. Hi, Shukri, how you doing, bud? Was dominant over the smaller, which was a descending channel. And I was contemplating looking for a short off the top of this inner range versus, of course, the bounce off the bottom of the bigger picture, which is the ascending channel. And of course, we had the higher low off the bottom. So, that one now, gee, we're great traders in retrospect, aren't we? You look at that and you think, oh, yeah, bounce off the monthly pivot, entry above the weekly pivot, piece of cake, that one. Why wouldn't you trade that? Well, why didn't we trade that? Good question, hey? I'll make the excuse that I wasn't in front of the charts at that point in time, but that'll do me for now until a better one comes along. All right, well, let's see if we can see an obvious one coming back the other way. But really, let's take stock of this and see where we've come from and gone to. We have moved 350 pips on Euro Kiwi in less than 24 hours. That's quite substantial for this pair, given that the ATR on this is way below that. Let's find out, shall we? What's the ATR? This is an exercise of its own. Daily chart, those of you who don't know how to do it, indicators, insert average true range. There we go. Over the last 20 days, I'm on the daily chart. We'll call it black. The ATR is in fact 128 pips. So we're 3 times pretty much the ATR, which is pretty substantial, one would have to say. Crazy stuff. Why? That's the question you've got to ask. And I don't really see an answer to that right now, apart from the fact, well, the Kiwi, you can understand the Kiwi because we had an election over the weekend, and generally elections will go one way or the other. They'll be a bit of a lead into a trend, if only for short term. And I'll call it the local money from our resident New Zealanders was suggesting that would be probably good for the country in both economic terms, well, probably economic terms more than Kiwi dollar terms. But we've actually seen the reverse since. There was a little bit of a rally after the election on Sunday, but that's quickly gone the other way. We have taken advantage of that in one regard because we have traded pound Kiwi long. That seems to have been it has held up at the top of this range. Now, we've already taken profit on this, and I hasten to add that we're now trading the old system, if you like, or the old slingshot trade management system. But that may change very shortly because we're going to talk to Shukri very shortly as well, who has been, as I say, trading the slingshot per se, but with his own twist on it. And he's having a pretty good run of it. So we'll have a chat to him in just a tick and see what that's all about. And of course, we'll investigate that further in the US session upcoming. But you can see clearly here that pound Kiwi, and we've been sweating on this entry for quite some time. Finally, we got the opportunity to do so. I don't know whether this is the one, to be fair, but it's given us a little bit of a boost. And of course, if you've been following this show or any other show that I've been doing for the last, I don't know, 2 months probably, we've been talking about pound Kiwi and its prospects of going up to around about the 221, 222 mark in this vicinity. That is still on my radar, And if we were to put a time factor on that, that would be into April of next year. So he has plenty of time to think about that one, if that is to be the case. And I don't expect that this will go, any faster there than that. After all, we're almost in November, and there's only 1/4 of a year, pretty much after Christmas time. It wouldn't surprise me at all if that's pretty accurate, that time in motion study that tells us at the end of April. If this is going to happen, then that's pretty much when it will. If we can stay in that long in this trade and add ourselves a few more positions along the way, then I'll be more than happy with that, of course. Long way to go. We are only just at the first hurdle, one would suspect, and that, of course, is the first resistance area. The next one, if we can get through here, is probably around about there, getting very, very close to the $2 mark. In fact, I'll call that now. I think that is, if we can get through here, where we're headed up to $2, and a pullback from there would be nice and interesting. Maybe that's our first scaling point on pound Kiwi. The other Kiwi trade that we are in is Kiwi CAD, and Kiwi CAD's going very, very well. I haven't nominated a TP2 here, but we're well and truly below our TP1. I'm not suggesting that you take TP2 at this point, but if you are in this trade, I think probably this area here is TP2 material, about 85.70. So another, well, I'm being a little bit ambitious today, but who knows, it could get there. About another 90 pips away, and that would be nice as well. In terms of the bigger picture here versus the bigger one on pound Kiwi, I think you'd be ambitious to be thinking we go below, that level there, 83.20, but stranger things have happened. And if we look at this in extension, yeah, no, I don't want to be trading below there. I wouldn't have thought. I'd be pretty much all out at that level, 83.20 on Kiwi CAD. So the Lord giveth and the Lord taketh away. The taketh away part is these euro pairs. As I said, euro pound, just about, we're just still in, and euro CAD, we're just still, I'm not giving up on them, of course, but they're not looking that healthy at this point in time. So that's a bit of a wrap up of where we're at, where we'd like to be. Oh, that looks interesting. Is trading a long. The euro is absolutely on fire, Alan, and I can't explain it. Can't help you there. Why? Got nothing. But there'll be a reason, and it's probably to do with Brexit. And don't ask me to actually expand on that, because I've absolutely no idea as to why. And technically, it's a little bit of a bugger up, but what really happens with those big, strong and fast rallies in particular is they generally offer up an opportunity to go in the opposite direction. So we'll keep our eye on it, and if we can find a turnaround point, then hey, we might be in a good position to take advantage of that. All right, so I haven't got that much at the moment. I'm waiting on the Aussie pairs to turn around. The euro now, I suppose, is in the same boat, that we've had these big blast offs. I don't know that we're going to the moon, but the man who knows all about the moon is probably with us here, and I'll just see if I can bring him on board.
I'm here indeed.
Oh,
where's my video?
Why am I hearing you like that?
Can you see me? Okay.
I've got my headphones plugged into the wrong.
Can you see my picture?
It's a wonder you can. Yeah, I can.
Yeah, cool. I'm here, man. I'm here. Ready to go. Ready to go.
Good. Now, listen. You and I have been having a little bit of conversation off air about Slingshot.
Yeah, correct.
And you've been trading the Slingshot. What kind of
Slingshot?
We'll call it your Slingshot.
No, it's a fork of yours. It's a copy of yours.
Okay,
It's like a crypto fork.
The little baby off to the
Yes,
side. Right.
yes,
Okay.
yes.
What's the idea behind that?
Okay,
We
it's
we
the
won't
same.
develop. We won't
Everything
go
is the
into your
same as
spiel.
yours.
We
Everything
won't go
is the
into your
same
spiel.
as yours. But the most important thing is I don't take the first trade. I don't take the first trade. So the thing is, if the slingshot is supposed to happen and it doesn't happen, it's going to come back with even more of a vengeance and just break to that level because it wasn't
Okay.
supposed to do so. You saw,
So
right? It was supposed to do this. If it doesn't do this, it's going to do that. That's one. The
yep.
second part that's more important because it's going to break with a vengeance. I take larger lots, but I TP very fast like you on larger lots, and then I'm out of the whole position, so I don't need to trade manage anymore. And we'll see an example. So, like you said, right, nothing is free. When you do that, I am what I'm giving up on all the potential trending. I'm okay with that.
Yeah, it's a trade-off, right?
Yeah, it is a trade. If you want to go trending and want to go for higher gains, you got to keep your lot small. Granted.
Or you trade a trending strategy. You don't trade this
Yeah.
strategy.
Correct. But now we're trading bigger because we're going to get out very fast. And why does this work? Because when the slingshot comes again, it comes with a vengeance.
Uh-huh.
Yeah. So what I'm saying now, rather than keeping the risk high, we're going to keep the risk to 1% also. The stop loss is very, very tight, but it's okay because it comes with the second time, it comes with a vengeance. If you want to do this the first time, I'm sorry, your stop loss is going to get hit.
Don't be like that.
Yeah. Because
So
our stop loss is very tight. It's like 20 pips.
Well, yeah, look, without going into the master strategy, of course.
Yeah.
It was built on euro dollar 30-minute chart. And
Right.
the reason that, well, not the reason it was born on euro dollar chart, but the reason that we have always had tight stop losses is because of, and I just went through that pretty much on whatever it was. I can't remember the cross already. Because of the average true range and because we notice on a day-to-day basis where price is generally likely to go. And that's always going to be the case. If you go back through history and you note where on every single day of the week,
Yeah,
bar let's say 2, 3, even 5%, you'll find that euro dollar in particular will stay between this level and this level.
right.
But doesn't go outside there.
Right.
So, if we're trying to trade long from this point, we've got a good chance. If we're trying to trade short from this point, we've got a good chance. So that was always born of that notion.
Question: how many pips is the average stop loss
On which chart?
on Euro 30-minute?
30-minute chart?
Don't change
Somewhere between 15 and 30 pips.
15 and 30 tips. Okay, now what I do is simple. If I were to do this slingshot too, I would do it between, because my risk is, I'm going lots 3 times bigger. I would be going between 5 and 10 pips.
Mm-hmm.
Yeah. Now you're going to say that 5 and 10 gets hit. No, it won't get hit because it's the second one.
Yep.
Yeah. If it's the first time, I agree. You have to go wider, of course. So that's really behind it, because now it comes with a double slingshot, so it gives you a chance to go past that. But again, when it goes past that, you can't really say, I'm going, it's going higher. Now I've tried both times. I've tried twice already. They were both in profit. Now they already hit 1%. So I trailed it at 0.5% and it hit the 0.5%. Next time I know if it hits 1%, I'm gone. I'm like gone for the day.
Mm-hmm.
Because as I said, you don't know when it's going to turn, but when it comes the second time, it goes fast enough that 0.5% to 1% is very achievable.
What are you using as exit points then?
I'm using, like you said, right? Think about the percentage: 0.25, 0.5, 1%. Totally.
Okay, so not necessarily a resistance level if you're going long.
No. It's all percentages.
It's all percentages. Okay.
Yes, correct. I've changed my language to percentages since you mentioned percentages a couple of weeks ago. So that's why I said it's another way of looking at the slingshot. Because the levels I don't measure because you already give the levels. So because I'm always asking a big O and you, right? What's the level? What's the level? I just want to know the levels because I was toying around those levels and I said, hey, they keep coming back.
It's amazing, isn't it?
Yeah, it's amazing.
Once you actually see it, you go, oh my God, why didn't I see that before?
And this is like seven. This is 7 times in a row, Geoff. 7 times. And where CAT CHF, where you guys were going down, I made a profit there. And that's why I have this SS, which I call the Sinoscot cover accelerator. Because if you remember that day, he found a level called 6944 on the 4-hour. Your trade was at 6957. So I saw the chart and it went like 6947 and went down. When I saw that, I said, okay, Slingshot 2, if it ever comes back to that level, 6944, I'm going to trade it because it looks like a good level. Maybe it's not 6957. So when it went into 6944, I got out at 6960. That was 0.5%. I'm gone.
Nice. I like it. So you're going to show us this, right?
Yeah, the rules.
In a few minutes. Cool. Okay.
So it uses all the same thing, guys. It's all the same. It's just the trade management is different. Everything else is the same.
Yeah, don't be confused, Alan. Look, I always have proposed that there are many ways to trade the markets, and there's also many ways to manage any system. There's no question about that. And I've got to say, over the past 3 years now, so I full-time trader before I discovered bamboo. That's all I did is trade. Since I discovered bamboo, I have been just a part-time trader, and I've been very lax in keeping up with the market system, the way the market moves. And the market changes all the time. Of course it changes all the time because you don't always have Donald Trump coming along. You don't always have Brexit coming along. You don't always have trade wars. Well, probably you do always have trade wars, but you know where I'm coming from. The market sentiment moves all the time. And if you're not moving with it, and I'll go into this further in the US session and how I have changed, even overnight, I've changed the system of management that I'm using because pretty much Shukri's given me a shot in the arm because he's been having a good look at the way he trades it. And I needed to have a good look at the way I've been trading it as well, because we're hitting TP1s, every single time just about, but we're not making tons of money out of it. So, and that's because the market isn't going on long runs. It's not giving us big follow-throughs. So we need to recognize that. We need to come up with a way of making that pay us rather than we pay the broker, right? That's our job. That's what we're supposed to do. And I've been pretty lax on that, to be honest.
Yeah, and the best thing, Geoff, tonight we can go at the GBP NZD trade that you gave yesterday. Because
okay.
I'll show you what I gave up. I'll show you the percentage, how much in dollar terms I made, and what I gave up. But giving up the big gain it's just part of the strategy. So you can say that this is Slingshot. The second time, take TP1. That's it. You're gone. You're out.
Yeah, look, as I always say, there's always room for improvement, and I've got no problem with that at all. In fact, I encourage it, and I say to everybody all the time, I'm giving you a skeleton. It's up to you to put the meat on the bones, and each will find our own way of doing that. I have when I first started trading this, right, I didn't come up with the core strategy. I've just made it my own and manipulated it into the way that I thought it should be done. And like I said just now, there are many ways that can be improved. And if you think that you've got the best strategy and the best way of trading, you're an idiot, because you haven't. You just haven't. There are many better ways to trade the market than what we do. And it's just a matter of taking note of what the current system is doing, or what the current market conditions are, what the market sentiment is from day to day, and trading it accordingly. So, Let's have a look at that, shall we? In the next, well, we'll go through the charts very, very shortly, but coming out the other side of that, we'll have a good look at what Shukri's doing, and then we'll unconfuse you, Alan. Hopefully, that's the whole idea. All right, time to end the free session, and we'll go into the US session proper. So those of you who have joined us for the first time, thanks very much for coming on board. Our subscribers will be continuing this session, and we will catch up with you guys probably tomorrow in the UK session, if not at the same time tomorrow. Have a good one.